I've been drawing lines on charts for the last 10 years, and I am excited to share with you one of the best summative videos where it comes to trend lines, something that a lot of people don't get completely, and a lot of people get completely wrong. So I want to make this as simple as these three things. The first thing is how to correctly draw trend lines. The second thing is the difference between a pierce and a test, and then confirmation versus a fake out. These are the three main things that people struggle with a lot when it comes to drawing trend lines. So let's start with the first one, how to correctly draw trend lines. So looking back over here at the price of Bitcoin, and this is 2022 to 2023, a trend line is very, very simple to get wrong. What a lot of people tend to do is they isolate a very short amount of time, something like this, and they use the trend line drawing tool, which by the way is over here. In TradingView, if you go here, it's Alt-T for Windows, or for Mac, it's Option-T. So when you click that and you press down the Control key on your Windows machine or Command key on your Mac, you automatically engage the magnet, as you can see right there on the left-hand side. So what a lot of people do is they just pick some random high and they choose a next level like this, and they say, oh, the trend level is broken. Now we're going to be breaking out higher. This is the first thing that's wrong. When it comes to drawing trend lines, where they're placed, this is right. But the amount of time, the time frame that we're looking at, the span, the range, isn't a great idea. What we want to focus on first when it comes to correctly drawing trend lines, as it says back up here, is that we want to focus on big swings, what are actually called pivot highs and pivot lows. So looking back over here at this range of time for BTC back in 2023, we have a low here, we have a low here. So these would be levels that we want to look to connect. And there's also this low down here. So these pivot lows provide us with a couple of ideas or a couple of places where we could start to draw trend lines. When we do this and we draw our trend line, we want to go with the lowest possible level first. So back here, November 2022, Wednesday the 9th, the low of Bitcoin, as it says right up here where the L is, and also on the right-hand side, it says 15,512. This level here is lower, 15,460. We want to start here. Don't just pick some arbitrary number. Go for the lowest, deepest cut. And then we click there to start the trend line. And then we want to identify the next lowest low. Now, sometimes we might not be able to reach this pivot low. For example, this would be an incorrect way to draw a trend line. Why? Even though this is a pivot low and this is a pivot low, there's a lot of price action that happens in between. So we don't want to have the trend line go into that. As much as this might suit our bias, and we can kind of argue and say, oh, well, look, this happened here and this happened here. This isn't a reliable way to draw trend lines. So what we actually want to do, and what I do, is something called resistance and support fans. These are still essentially trend lines, and I'll show you what that looks like in a second. We want to find the next low. There we go, right here on 30th of December. So now we have our first support line. The next thing I like to do, and this is a little bit untraditional, but I like doing it a lot, and I'll show you why. I'm going to take that next connected low from here to here, and I'm going to press and hold Control, and I'm going to click on the next low. Now, what this does is it provides me with a fan. This is the long-term support line. This is the next level. And if we continue to have these higher levels, for example, from here to here, looking retrospectively, if we're looking like this, seeing the low, then once the price action over here starts to fall below this level, then we can start to go, uh-oh, this is now a short-term support level that has been broken. We want to be extremely cautious and careful because breaking that line is a sign of weakness. And what happens? The price falls below it. And this actually goes into our third target, the idea of confirmation versus a fake out. When we have a confirmation level like this, seeing it tested, and then we have these levels right here, and the price goes below it and it goes back into it like this, this is a confirmation, this is a test, and this might make you feel good for a minute, like, okay, no, I was wrong. The price is going to go up higher, except this is a fake out right here. It is a failed breakout, and the price actually chops lower. Now let's see what happens. It actually bounces off of this level that we drew back before. Now I'm getting ahead of myself, but this is the way that I draw support and resistance levels. It works extremely well, especially in crypto, to give us short and long-term levels. Now, going back to the text that I wrote up top, I'm kind of getting ahead of myself, but I wanted to show you it and how I would draw it. The next one is pierces versus tests. Back over here, to use this as an example, we chose the next pivot low. We could even say like back over here is a pivot low, but we're going to just choose this level just to stay consistent, okay? Now, focusing on price action way back in here in 2023, we could see that the price of Bitcoin made a low on Friday, the 12th of May, 2023. About 5 or 6 days later, we see the price come down right here. Now, do you see this long lower wick? The long lower wick actually exceeded this support level. And this is what I call a pierce. A pierce is essentially when the price exceeds or goes beyond this level of support or resistance. It works both ways. A test is right here. A test is where the price gets so close to this support line, but it doesn't exceed it. So this is actually a perfect example of a test right here and a pierce. Now, when we get a close right here, the red candle open at the top, close at the bottom, a close like this is where a lot of people tend to panic too soon. And what I mean by that is exactly what happened. If we sold right here when the price broke, and we had essentially like a short position up and a really tight stop loss, maybe like right up here, look what happens a couple days later. The price actually shoots up, goes above these levels, likely stopping out any short sellers only to dump the next day. And if you didn't get stopped out there, guess what? You get stopped out here. Now, there's a difference between a pierce, a test, and a close, and it goes in levels of severity. A test is actually a decent thing. We want to see tests, but pierces show a lot of weakness and closing is really bad. Closing below levels is really bad. But what we want to see is actually a close 3 days in a row. We want to see a close below 1, 2, 3. Now the price should be confirming that this level is broken right here. And it actually pumps up here. It closes above this level, faking us all out. Then it closes back down below. It's trying to hold it. It's trying to go up higher. But in reality, that was the fake out right. Actually, this is the fake out. This is a fake out on both sides of the spectrum. So here's a good question. What happens when this level is broken like this? Do I change the trend line? Do I delete it? I personally don't. What I like to do first is watch it. So I'll turn it into a dashed line. So that means that this has been tested. It's pierced. It's a little bit weak, so it's not going to be as reliable. Another thing I might do is extend it out to find the next low. Now, this might seem crazy to just keep moving it lower and lower and lower, but it actually works really well because I want to see if there's going to be new support. So let's do the same idea. This level is broken right back over here, and we're going to move this right down to this low. There we go. Now that we have this new low, look at the price moving up. We see a pierce. We know instantly this has been a weakened level. Then we see a massive crash below it of 5%, goes right back up to essentially test this level, closes below. That's it, game over. Price goes down, and now we're going to get rid of this line and see, does this next line hold up? And sure enough, it does. The price of Bitcoin goes up higher. But does it keep this level in the future? No. What happens over here in August 2023? Do you see? We have a test, a kind of test, and a pierce. As soon as a support or resistance level is pierced, understand that this is a big red flag. A close below that is even worse. And then we have a test again, which is piercing, a close right below it. This is danger. And then the price absolutely dumps. So now this is why a support fan in this case works really well. Because then we're looking at the price action here and we're getting ready for this long-term support level that isn't exactly reached. Now, what's interesting is that you'll see traders do this. They'll keep levels and they'll say, oh, well, there we go. We have resistance that used to be support and all that stuff. I don't play this game because eventually it's not going to work out and your eyes are going to be tricked to think, okay, well, it has to hold this level or this is a significant level. Sometimes it works, sometimes it doesn't. The last thing I want to talk about is the difference between a confirmation versus a fake out. And I'm going to use the price action over here because this is actually a really good example. So I'm going to find and identify the high of this period right here. So it's 73,835. And then I'm going to draw an overhead trend line right here. Now notice how many times we get these tests. Actually, it's a pierce, test, test, pierce, 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 test, test. This level is being significantly weakened over and over. And during this time, my expectation is that eventually this level will break. It took a lot longer, but eventually that's what happens. Look back over here. In July, we see a run up, tests, and we see more pierces. But what eventually happens is that we're waiting for a close above this level for 3 days. That gives us confirmations. Anytime we pierce above it and we don't stay above for 3 days, it is a fake out. Fake out, pierces, which are fake outs. Now, check this out. More closes, tests, pierces, and then we have a final close above. 1, 2, 3. Now, this is confirmed broken. And even better, look right here. See when the price returns back to the previously broken level right here on the 23rd of October, 2024. See this return back? These kind of bounces after breaking a support level, it comes back down to confirm it as, a resistance level, confirms it as support. Then the price rockets up from there. We can do the same thing for either support or resistance, but the concept remains the same. We need to know how to correctly draw trend lines, and we use the pivot highs or the pivot lows. We want to focus on the wicks. We want to know that there's a difference between pierces and tests. Pierces are much more severe compared to a test. There's a difference between confirmation and fake outs. Fake outs are going to get a lot of those people that are antsy and ready to get into a trade or get out of a trade, forcing them to market buy or market sell into the position, out of the position too early, where we really want to wait for confirmation, and confirmation comes after 3 days. And this is how I approach drawing trend lines. If you learned something from this video, leave a comment down below. And until the next time, you know what to do. Stay awesome and stay in the green. Peace.